in less than 24 hours. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today on Monday, market chaos will begin to erupt. I'll show you what is starting on Monday, and more importantly, how you can profit from it. On the show that makes you money, this is our Sunday show where we take a look at the technicals, momentum, and machine positioning to help you be a better trader and investor. And with that, let's head over to Bloomberg, where he picked today's story up with a headline: the market is disregarding what the Fed is saying about rates because something is changing about the markets in a big way, and investors are not convinced, as the market is not sold on the prospect of inflation and labor market readouts, not giving the Fed the room for multiple cuts this year. That stubbornness is keeping intact the environment that benefits risk assets, and that's exactly what we're seeing in the markets right now. People are wanting to buy at all-time highs. They believe the market's going higher. They cannot get enough of this market, but something on Monday starts to change. We'll show you what that is, as historically rate cuts have marked a key inflection point that has ushered in strong equity returns, but it's also the following cuts where things start to change. But that only happens in cycles that aren't triggered by a recession like this one, or at least that's the prevailing view. And that would explain why the latest flows from Bank of America and EPFR Global show rotation into financials, materials, and utilities. But is this the wrong move? Well, we're going to make the case of where the market's likely to head. Three crucial groups closely tied to the economy that historically benefit from rate cuts as long as there's a robust economic engine. Of course, the risk is, what if there isn't? And here we have, of course, investors crammed in at the peak in 5 stocks. There are very few signs on the horizon that you're going to see any sort of truly bumpy landing. Well, on Monday, that changes everything, as aggregate equity positioning now has climbed to the highest level since November 2021, when the NASDAQ was at a peak. Of course, if you remember, we'll take a look at a chart here momentarily. What followed November 2021 was a huge sell-off that nobody saw coming. And next week could prove quite eventful for equities, and that's the understatement. But one major fund manager, one major investment bank disagrees with this view, says that things are going to be even more bullish. We're going to make the case of why, because on Monday, what changes everything is the corporate buyback blackout window begins, and that means the largest buyer of equities is moving into the dark. But here we can see the Goldman Sachs Tactical Flow of Funds report, the pool party checklist, as they're getting ready to celebrate stocks going even higher, noting the S&P 500 closed at the 27th all-time high this year. Global equity funds have seen $190.5 billion of inflows year to date, the second largest equity inflows on record, if you can imagine, as people cannot get enough stocks. But here's what's coming. In a matter of days, equity markets closed on Wednesday for July 19th for Juneteenth. Fixed income also closed, but that's not the big one. Quarterly Quadwich and S&P 500, that's coming the following week on June 21st. But month-end, quarter-end overhang as pension funds rebalance. They're going to be looking to sell equities here to buy bonds as they immunize their returns. But again, the bigger issue here is the largest buyer of stocks is going in the dark. And then on July 1st, watch out. Goldman Sachs says new month, new quarter inflows, and big money is coming in the markets. They said it's going to drive it higher. And looking at the first half of July, since 1928, July 3rd is the highest day hit rate for the S&P 500, suggesting maybe with the blackout window, you look to take some positions here in cash, take a profit taking here, and look to reinvest in the market, as July the NASDAQ has been positive 16 straight Julys, suggesting bullish fever is going to continue. But will it? Because the underlying fundamentals of the market are now starting to say that maybe that's not the case. But again, everybody's in this market. You have retail investors, institutional investors. More importantly, machines are virtually max long this market. They've been long. Of course, we showed you how to buy that dip in the machines and get ahead of them. And yet, here we're seeing a potential reversal if the biggest buyer does drive stocks down as they go into the dark. Machines could sell in a big way. Let's take a look at our momentum screens. We'll show you where the opportunities lie in this market. We look at the S&P 500. Momentum is very strong. Now, we look at momentum over a daily, monthly, even 3-month and a 6-month window. And how do we do that? Well, we take a bunch of technical signals like the relative strength index, which is sitting at overbought territory, and MACD, the moving average convergence divergence. That's got a positive cross. And what drove the market the last few days of the end of last week was very simple. Corporate buybacks had to get in the last of what they wanted before the blackout window, and they bought and bought big. And what that tells us is momentum in this market is very long. Look at this, max out positions across the 1, 3, and 6-month window. We have 30 consecutive daily buy signals. At some point this reverses, suggesting again maybe raising your stop loss, taking some profits here. And upside target, well, we don't know where this goes. Downside target, the 50-day moving average. We even mimic the machine positioning, but we run it on a historical basis. Our momentum or CTA Timer Pro here on a fast and slow algorithm show machine positioning at a very long setup. This means if you want to beat the machines, we show you how. You want to beat the technical traders who find themselves getting late and getting out early. We show you how to do this every day, because when the machines are mispositioned, well, that shows up on our CTA Timer Pro report, and when the technicals are favorable, that shows up on our Momentum Timer Pro report. Here's the best part. We now give you all of the data below. Stop loss levels, my view, macro views of each trade, all there for you every day when you have a trade. And on the weekends, like we did on Saturday, yesterday, we give a breakdown of all the recent trades, what my thoughts are, what you need to be doing to make money in this market. And here's the best part. You can lock in a 30-day trial before we raise our price right now. Links in the description below, because as you're about to see, this market could go in a direction that nobody thinks. Remember, when everyone's all in one direction, it tends to go to the opposite place. So let's take a look at the chart of the S&P 500 and make the case of why maybe markets aren't going the direction everyone thinks. Here you can go back to, of course, to November of 2021. Everybody was all in. Everybody thought this thing was roaring, and then it turned around. Machines started to sell in a big way. Then as we zoom in on this chart, what do we know? Of course, buyers here, look at that. Toward the end of the week, big acceleration in demand due to corporate share buybacks. Nothing here indicates the market likely to move down. We'll make the case on that here shortly as we look over at the tech stocks. Remember, biggest buyers of their own stock, that's these big cap tech companies. Momentum positive, RSI, massively overbought. MACD, positive cross. Again, 30 daily consecutive buy signals, nearly maxed out across the momentum screen. If you're looking to be long the market here, I'll show you some opportunities where momentum's to the downside. That's what you want to do, is find things that the machines are moved against, where you have opportunity where momentum is down and looking to reverse. That's how you make money in the market. It's not buying at the top and hoping it goes higher. Upside target, well, again, we don't know. Downside target, 50-day moving average. Again, everybody is long the tech stocks here. Let's take a look at QQQ, and what do we see? Of course, 10-day volume profile right there. But what happened going back again, November 2021, tech stocks took a big drop. Could you imagine if stocks gave up all of these recent gains? People would be panicking, and for good reason, because again, when everybody's long one direction and something changes, well, what is leading that change perhaps is the small cap index. As we look at the Russell 2000 here, momentum's negative. It's been negative for a few weeks now. Relative strength index 41 headed toward oversold territory. Not there yet. And MACD's got a negative cross. 10 consecutive daily sell signals. So we alerted our subscribers, look, if you're long small caps, it's time to reverse position here. Friday closing, 198.73. Upside target, we've revised that a little bit lower. Downside target, 194. And look at our machine positioning, because on a historical basis, we're telling you the machines are backing off their longs. They're taking profits here, and they're very close to moving into a short position. You want to look for opportunities. Wait till this is negative. Wait till, of course, momentum is deeply negative, and you'll have all the opportunity you want. Let's take a look at IWM first. And what do we note? That it is indeed starting to change leadership here. Sellers are above. We've raised our upside target back here to around 206 or 203.35 where the 6-month volume profile is. But notably, you see sellers above, and that's dangerous. It's got a little bit of resistance in terms of support right below here at 196.34. If it holds that, well, that could set a move back up. If it fails here, and you notice it has before, you're looking at the 200-day moving average or down here into the supply zone below. But what is the risk the small caps are seeing? Well, let's take an overlay here and add the S&P 500 to the chart, and I'll show you what's looking at going on from a perspective of fundamentals. You see the S&P 500 driving higher. Small caps, they're not doing that. And you say, well, that's not a big deal. Small caps might reverse. Well, not necessarily. As we zoom out, let's take a look at some other situations here where we see small caps not following, of course, the S&P 500 leading them to the downside. There are cases where we can note that where small caps go, the large caps follow. You can see the relationship between the two. They're very strong, but notice how small caps roll over first on the downside move, and that's suggesting, of course, that the large cap equities are going in the wrong direction here, and that is indeed the risk. You see right here again, small caps moving down, large caps still moving higher. You see it right here. What it tells us, large cap equities likely to head lower in a meaningful way. But that's not the only sector that's telling us some warning signs. We look at the energy sector, momentum negative, RSI now near oversold territory, negative cross. We see a sell max. You're looking for reversals. These are the signals you want to see on a 1-month window. You get a big sell max, you get machine positioning at near max short, and then you see price move against it. We hit our downside target, the 200-day moving average. We think this is going even lower as demand for energy in a weakening economy, well, that's going to go away. Let's take a look at XLE. Let's look at the big picture first here. And what I want you to know, that the energy sector is telling us something is fundamentally wrong with this market. You look again here, S&P 500 going down, energy sector, hey, said, no, you need to go higher. This time it's the other way around. Energy sector is warning the S&P. You see energy sector moving down right here. S&P rallying. This is the issue. You do not get a rising stock market if energy is going to continue to drop. It's a real big red flag. But let's take a closer look here, because what we see is, again, sellers are above here. I'll zoom in a little bit, but look at this as a buyer's target way down here at 84.35. You zoom out over to the 1-year chart, you see there's tremendous buying support here. This was a largely retail driven rally, and we zoom in 10-day window, sellers above. There's that volume profile. You look at the 30-day window, sellers above. 90-day window, sellers above. This is what the big players do. They lure everyone in to the energy market, and then they sell, sell, and sell. Let's take a look at where opportunity lies. That is the bond market. Now, remember this trade, we did not use stop losses. We encourage people to use them. You'll note that we're not long the equity market on any of our positions here. Good reason. A blackout window is hitting. We're just a bit concerned about that. We'll look to find other positions on a pullback. Not worried about this at the moment, because we look at so many sectors and so many different things. There's huge opportunities in this market. Now let's start with TLT. We look at the long bond, something we flagged to our subscribers a long time ago. Say, look, you need to buy in this. Now we showed you what happens when you don't use a stop loss level. People get upside down. You need to dollar cost average. Using the signals back in, we're now up 0.38%. Upside target 96.01, and let's take a look at the downside target of 92.95. Look, we're saying the machine should be long. They're still short covering. Here's opportunity for you. You look at momentum, maxed out 1-month window. We nailed this one right at the bottom. Let's take a look at TLT and show you why. Here's the bigger opportunity right now is in the bond market. First of all, it just broke its 6-month volume profile. That is resistance. But you see this downward trending dotted purple line. You see sellers along the way here. What happens is these sellers get worked out. If they're short and price rallies against them, they're going to have to cover. It sends prices shooting up to this 100 level. And if we zoom out, well, that means a potential breakout from here. Looking back at the recent all-time lows over the last 2 years, you see a move up to 100. You might find some sellers here, but you break that, and well, the buyers from wide back in here start to take over and drive prices right up right around 109. That is your opportunity in the bond market right now. You're seeing a big move here. Again, suggesting as momentum pushes higher, short sellers get worked out, and the Fed looks to cut in a matter of months. The market's pricing this in. They look ahead about 3 months. How about gold? Everybody is really bullish on gold. We were warning you the price is going to reverse. Now we have 6 consecutive daily buy signals. Now our CTA Time Pro says, wait a minute, there may be some short covering going on here. We're saying, hold on, maybe not what you think. Let's take a closer look as a relative strength index, MACD, both not in great moves, right? What we're looking for as we zoom in, what do we see? MACD heading down. Relative strength index still heading down. You're looking at this top here. There's a lot to unwind. And what do you want to see here? You notice this volume, and there's not a lot of volume here. So price moved without volume. That suggests it could move to the downside very quickly here. Let's zoom in to the 6-month window, and you see, of course, the biggest buyers way down here at 188. Let's zoom in 10 days. What do we see? Sellers right at the same level. So buyers trying to come in here, sellers still above. There's your risk. Zoom out to the 30-day window, sellers above. 90-day window, and what do you see? Sellers above. The risk to gold here is indeed to the downside. Of course, a lot of people don't want to believe that gold can actually go down here. That is the risk that we're seeing, and so I would hold off on this trade. Again, there's other opportunities. We'll take a look, but we nailed the gold trade, and again, now giving you even more commentary than before. You want to make money from the bottom to the top. Here you would have made 29% return using either of the reports, because we flagged back on October 12th when to buy this thing, and that meant all you had to do was keep raising your stop loss levels and sell somewhere after the price started to move down. It was that simple. How about gold miners? Well, many people are long the metals. They're also long the miners. Momentum here is negative. Relative strength index cooling down, heading lower. 6 consecutive daily sell signals. Downside target is 100-day moving average. And look, we nailed this. We told you 6 consecutive daily sell signals. We showed you machine positioning moving into short position here, looking to get out of this position. The machine's trying to capture in their gains as many people look to buy. And what do you see over that 90-day window? Sellers are above. That is dangerous. Start looking at this topping pattern. You can see a very quick breakdown to 31 would be the next move with a target all the way down here at 29, if you can imagine that. Look at the 30-day window, sellers above. How about the 10-day window? Sellers indeed above. You look at the 6-month window and sellers above. Putting in a topping pattern here, you look at momentum, you see everything's headed toward the downside. If you're looking for the gold or the miners, well, this is not the time, not the opportunity. Let's take a look, though. You could have made a huge fortune, whether you followed our CTA report or our Momentum Timer Pro report. Look at this. We told you to buy the miners back in early March. From that point to the peak, you could have made over a 30%, nearly a 40% return. And all you had to do is raise your stop loss levels. It's just that easy. We make trading that simple. But one place we do see an opportunity is in the commodities market. Let's take a look at soybeans here, and what do we see? Relative strength index, oversold territory, MACD, negative cross, 13 consecutive daily sell signals. We told you if it pulls back into a certain zone, you should be looked to be a buyer. How about this? Max short on the fast algorithm, a slow one getting near that same position. We're seeing nearly a big pullback on the monthly to a sell max. We're getting to the signals we want to see here in soybeans. I think there's going to be tremendous opportunity, because look at this chart. You see a bottom, it rallies up into a supply zone. Now, if you're not familiar, when we talk about supply zones, this is where buyers or sellers are at. In this case, sellers were here. They drove down. The buyers said, no, we want to be here. They squeezed the shorts, moved up to another sell zone. The sellers said, no, not so quick. And they drove buyers all the way back into the zone in where it's starting to hold. And our reports are going to pick this up in a big way. And look at the 10-day window. Buyers are coming in here. Price is a little below that, so this is still premature, but you see what's happening. How about this over the 30-day window? Buyers coming down in the zone. It's telling you a bottom is in the process here. Looking at the 90-day window, well, you've got some room to move. So right now, sellers are dominant, but the buyers are putting in a bottom here. If you're a subscriber, of course, we'll let you know when this flips. And something that is flipping in a big way is the dollar. We still think this reverses and goes bearish. But for the moment, relative strength index turned around at 62, positive cross on the MACD, 6 consecutive daily buy signals. Now, you know we're bearish on the dollar, but we're only down 0.33% on the trade. Nothing big, because we even track the US dollar bearish fund. Its signals are still fairly strong. We have a long buy max on the 1 month window. We note that there's been 5 days of sell signals. We think this is a short-term move. Machine positioning is long. The Fed is likely to end up cutting as the data shifts. The market is just in the short term gone a little bit excited, and you see it gapped up here on Friday. This is sitting at the recent high and trying to break out, and maybe it does. And if it does, it's got a little bit of room to run up in here to that low $29 level. We'll still hold on to our bearish view, because I do believe the technicals are favorable here. We see buyers in the short term came in over the last 10 days, but over the 30 days, you'll note buyers were still here beneath. The question is, can they hold on? I'm not sure they're going to be able to do that, but in the meantime, we still think the market is favorable to the downside. And of course, that is from our macro perspective, which we do now include in our reports every day when we talk about our different signals coming up. But another opportunity, if the dollar materially weakens, you want to talk about big potential opportunity, that is in the Japanese yen. Why? Because there's massive short positions. We told our subscribers about this. 10 consecutive daily buy signals. This is a high risk position, so be careful before you trade this. Momentum positives coming off oversold territory. We're setting the downside target at 58.65, and look at this, 58.80. So this is, again, a high risk position unless you have the stomach for it. Hold off and wait for this to turn around, because if the dollar weakens, the yen takes off, and there's massive amount of shorts here. You see 1, 2, 3 potential bottoms to zoom in over the last 90 days. You see very clearly buyers sitting down here, sellers above. But who's one of those buyers? We've noted that that's the Bank of Japan. And here you can see, of course, over the 30-day window, you're looking at 58.97. You want to get some closes above this, but you see in the short term, buyers are stepping under here. We're holding on to this notion that there's going to be a reversal here. There could be a big trade in the yen. You'll note we don't have a position on this yet. We'll let our subscribers know when that happens, because there is opportunity in this market in a big way. You don't have to be long U.S. equities to make money. When you look at the big picture, there's opportunity somewhere. Here's the best part. We find it for you. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.